Thank you for joining me. I'm Alex, and I want to answer the age-old question, what? So we are talking about GameStop and what happened. So GameStop does gaming retail, mostly video games, gaming consoles, computer games, apparel, some other things, obviously. Current stock price is $147.98, which is up 92% today or yesterday, obviously. And then in pre-market on Wednesday, it's up between 60 and 90%, depending on which minute it is. So current market cap is $10.3 billion. Obviously, it depends on the minute right now. Revenue $6.5 billion, which is down significantly. Earnings negative $471 million, which is down, but still a loss. And the current PE is 35 with a forward PE of 37. Current PE negative 35 is not great. Dividend is 0. I don't expect that to change for reasons we'll get into. Total assets $2.8 billion. Total liabilities $2.2 billion, and both down. Not really something you see all the time. Stockholders' equity $612 million, which is down like 50%, which is also not great. And so risk factors are the obvious. Global pandemics, Amazon, gaming consoles not having an optical drive anymore, the usual. So why is it up 90%? And why was it up yesterday? And why is it probably going to be up tomorrow? The short answer is memes. It's always memes. So as the story goes, there's a short seller that made a comment on Twitter that basically GameStop is worthless and he's shorting the stock by a significant amount. And so there's a subreddit that kind of sprung into action and hyped the stock for reasons. And so now there's a short squeeze. And what is a short squeeze? So people shorting the stock are selling the stock without ever having owned it, and then eventually they want to buy it back at a lower price and pocket the difference. The problem is that you need to have a significant amount of money to be able to short stocks. Otherwise, you will have to sell it at a huge loss, a potentially unlimited loss, to close out the position. So the story goes, you borrow the stock, you sell the stock, and then you hope to buy it for a lower price. But since you borrowed the stock, you're going to have to give it back anyway. So if the stock price rises to the moon, in this case, eventually it gets too costly to hold on to the borrowed share, and you're going to have to buy it back to give it back. And that's a short squeeze. So when the stock price rises by 100%, then the people shorting the stock lose about 100% of their money. And if it rises beyond that, they lose more than their money. And it's just there's a certain limit at which point it becomes impossible to keep holding on to the stock without going broke. So that's when the short squeeze happens, and people need to buy the stock back for a higher price than they sold it for. And since they need to buy it back, the stock price rises, which makes it impossible for more short sellers to hold on to the stock. So the short squeeze happens and the price goes up way too much in this case. So obviously, neither the shorting nor the stock going to the moon is based in any way on any fundamentals whatsoever. It's just kind of memes, basically. So that's what GameStop is. To recap, for a growth investor, obviously no growth. For a dividend investor, obviously no dividend. And for a value investor, the balance sheet sucks, the PE sucks, the earnings are negative, and the price is way too high. So you get the idea. Anyway, that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.